Hi, I'm Trevor Allison, founder of Authentic Life Financial Planning. In this video, we're going through what to expect during an IPO. So what can we expect during an IPO? There's kind of three main things that I think of. The first is you need to expect volatility. Most companies that go through an IPO see a significant amount of price fluctuation and volatility over that first year that they're a company. Even with public companies, whether they're recently IPO'd or have been public for decades, they're going to have pretty significant price fluctuations as their market changes, as their product changes, and as the world changes. But it's especially true with recently IPO'd companies. There's going to be pretty drastic, volatility over time, and we'll look at a couple examples of that. The second thing to know is that if you're going through an IPO, your company likely will have a lockup period. What that means is that the day the IPO happens until 3 to 6 months later, you cannot sell any of your shares. You're barred from doing so, and it's illegal actually to do that. Some companies will allow you to sell some of the shares during that first maybe 30 days or 2 weeks, something like that. But many companies, when they IPO, they have a 180-day lockup, which means you cannot sell during those first 6 months. And so we'll talk about that. We'll talk about how to plan for that when that happens for you. And the last thing to expect is that you need to have a plan, but you also need to be aware that you're going to get punched in the mouth. And plan A likely is not going to be what actually happens for you. And I'll talk about that a little bit more with these next couple of slides, because we'll look at volatility of actual companies who IPO'd and what their volatility looked like in the first 12 months. The first company that we'll look at is Meta. So Meta IPO'd in, I believe it was 2012, more than a decade ago at this point. Obviously, the market was much different then than it is today, both, not just the tech market, but the stock market, the political landscape. There's a lot has changed since Meta went public. But I think they're a really good example of what can happen when a company IPOs. And so, as you can see over on the left-hand side here, they started at a pretty high price and they immediately dropped. Basically the same day, that first week, they dropped very dramatically from where their initial public offering was, where their initial pricing was. And that shouldn't be too big of a surprise. What companies expect they should be able to IPO at and what the investment bankers think they should be able to IPO at is likely going to be different than what the market actually wants. It's going to be different than what the market essentially has the appetite for that risk of purchasing that company. And the reason why we need to be aware of that is, more than anything, because of taxes. One of the problems that we'll talk about is that you may get taxed on the value when it's way up here, but if we look for this 12-month period, if you have income there and taxes aren't due until here and you did not sell appropriately in advance, you may end up having to sell at much lower prices than what you're getting taxed on, which means you're paying way more tax per share than what is actually available. If you aren't properly preparing for taxes, that may mean you have a tax or a cash crunch. And so we want to avoid that as much as possible. Obviously, we have zero control whatsoever over what company stock is going to do over this time period. And we have zero idea of what the company stock price is going to do going forward. And so because of that, since we have no idea what is going to happen, and since we have no control over that, we have to make a plan in advance to have the cash available to pay the tax when it's due. Because no matter what, the federal government is going to get their money. And so we need to prepare for that reality, and we need to accept the reality that we cannot control the stock price, and that we cannot control what what happens with the stock price going forward. Now, obviously, in hindsight, again, this is 12, 13 years ago that this IPO happened. We can see the stock price when I took the screenshot, which was sometime last week, was $500 per share, which looks great, compared to the $37.50 or so that it launched at, and the $25 or so that it was at in April of, I believe it's 2013, but I could be wrong. But the reality is, we have no idea what's going to happen with our company stock. There's so many examples of companies, much larger than Meta failing. And so we need to prepare for that volatility. We have to accept it. We have to accept that we can't do anything about it, which means we have to prepare in advance for the taxes because they will be due no matter what. The next example that we're going to look at is Airbnb. They're a much more positive example. I won't spend as much time on this one as I spent on Meta. But they are an example of where, it started at, what Airbnb and the investment bankers thought was reasonable. It immediately dropped, but then it went way up in the first couple of months, and then it dropped again. There's just a ton of volatility over this over these 12 months that it's going to be really difficult to plan for. And so you have to be aware that what you expect to happen likely is not what will actually happen. And so while we do need a plan, we do need to understand what we're trying to accomplish when we're going through a liquidity event. We also have to understand that plan A likely will not happen. For me, this looks like a great plan A, but the likelihood of that happening is obviously nowhere near 100%. And so you have to prepare for worst case scenarios, which, isn't Meta. Meta is not a worst case scenario, obviously, but it certainly is a worse case than Airbnb. The last one that I'll look at is a more recent one. This is Reddit. This is a little bit more than 12 months. It's more like 13 or 14 months because they launched in, I believe it's March of 2024. It's currently May 2025. And even though they were not as volatile in the kind of the spiky up and down that Airbnb and Meta was, they still had pretty significant volatility. If we look at where they started around $50 per share, shot way up in February of 2025 to about $225 per share, and then immediately cratered back to earth and lost about half its value since then. It's May 2025, so in 3 months, it lost about half its value from where it peaked at. Now, if you just are looking at that 3-month period, that may feel really crappy that that's what's happened. But if you zoom out just a little bit more to when the IPO happened, it's more than doubled the price. Again, it started around $50 per share when I took this screenshot in May 2025. It had more than doubled in 12 months. That's more than 100% return in, again, 12, 13, 14 months, whatever it was. The thing I want to point out or really reiterate with this screenshot, is that you have to expect volatility. You have to make a plan, but you also have to know that plan A is not going to work out. Volatility is going to be a thing, and you have to be aware of that and have a plan for how to deal with that. Because again, you have no control over that. You have no idea what will happen with the stock going forward. So let's talk about the IPO timeline and what happens as the kind of what the IPO life cycle is. So first thing that happened is the company, privately, secretly, essentially, will start to prepare for the IPO. They'll start to coordinate with investment bankers and institutional investors to see if there is an appetite for that company to go public. Once they've gotten the green light, they will formally announce their plan to IPO. That process from preparing to announcing can take months to years. It really just depends on the company and what the appetite is for that company to go public. Once the IPO has been announced, there's usually some period of time where regulatory reviews need to happen and other approvals need to happen. It's usually, again, 3 months seems to be kind of the time frame that I've seen. But again, it can be longer or shorter. And just because a company announces an IPO does not mean that they will actually go public. The reason for that is, again, they will start to work with investment bankers here. And by that point, they may feel like they have the confidence that if we move forward with this, there will be buyers available with cash available to purchase our shares at what we think they should be worth. But that doesn't mean that once it's official and out there, that that will actually happen. And so you do need to be aware, again, have a plan, but be flexible, that just because a company has announced their IPO does not mean they will actually go through with it. Now, what really matters for you is that over time, after the IPO has been announced, you will start to receive the details of the IPO. So you'll start to see what is going to happen. You'll start to get a sense of where they're planning to price the IPO. Eventually, a date will be announced, and you'll get all the details you need for how you need to make a decision for this process. We'll talk about what those details actually are and what you need to do to prepare for it. We'll talk through what that information is and how what you need to gather to make the decisions that you'll need to make. So we won't cover that now. At some point, though, the IPO actually happens. It goes through. Again, likely you will have a lockup. Again, usually a 90-day to 180-day period where you cannot sell your shares as an employee. It also means that anyone in your household likely cannot sell any shares, which means you can kind of get stuck. Again, if we look back at the Meta price chart, the stock started way high and dropped just so fast, and then had some volatility both upwards and downwards, but it didn't really recover for more than a year before its initial price. And if you have to pay the tax when that happens, again, you may end up having to pay a lot of tax with cash that you don't necessarily have, or you'll have to sell at a price that you're not happy about. So you have to have a plan. Eventually the lockup will end. And then at that point, you have to start paying attention to what your post-IPO stock grants look like, what the values of those are, how they vest, and really start to think, okay, how much of this company do I actually want to own? Because the right answer likely is not everything that you've been granted. And so you need to make a plan for that. You need to start thinking about what life looks like after the IPO. Thanks for watching. If you found this video helpful, please like, subscribe, and drop a comment below with any questions or topics that you would like to see covered. Financial planning is all about creating the life you want. Let's build it together.